Welcome back. It's time now to take a look at the top business stories. Nikhil to repay $750 million Islamic bond with support fund. Abu Dhabi's GDP forecast to rise by nearly 4% next year. And for all of this week, we take a look back at some interview highlights for 2010. The GCC markets ended mostly higher today, and there were positive results across the UAE bourses at the end of the final trading week for 2010. The DFM was up 0.5% to close at the 1,630 mark. MR Properties rose by over 2.5% as a partnership between Emirates Healthcare and a unit of MR Properties has sparked investor interest today. Arab Tech also posted gains of over 1.5%. Emirates MBD was up over 0.25%, while Dubai Islamic Bank fell under 0.5%. DP World rose 0.75%. 115 million shares were traded, valued at 183 million dirhams. And over in the capital, the ADX gained over 0.5% to close at 2,719 points. There were positive results within the banking sector, with National Bank of Al Khain posting gains over 9.5%. RAK Bank rose nearly 2.5%, and Abu Dhabi Islamic Bank was up over 1%. And in the property sector, Aldar Properties rose over 1.25%, while Suru Real Estate gained by over 0.5%. TACA was up over 1.25%. 33 million shares were traded, valued at 59 million dirhams. And for a detailed discussion of how the local markets did this week, we're now joined by financial analyst Bruce Powers. Bruce, welcome to the show again.
Thank you. Happy New Year.
Yes, Happy New Year. So the DFM posted gains, the highest gains in 4 weeks, off the back of a rise in investor confidence, as well as strong corporate earnings. So, how has this affected global markets as well as regional? And do you think that this confidence will stay afloat, so to speak?
Well, if we look at the GCC, the DFM and Abu Dhabi have been two of the weaker performing markets, along with Kuwait and Bahrain. The strongest have been Qatar and Saudi Arabia. Now, the UAE markets have been in a retracement for the past couple months, and it continues to be so. So it's a little too early to say that the moves from the past couple days mean that retracement is over, although it could. Now, looking at international markets, they continue to be very bullish, although recently we've had lower volume. So in the new year, we could tell a little bit more. There is some growing concern among some analysts that a more serious correction in the international markets is overdue. So we'll have to keep an eye out for that. But so far, there's no signs of that. So until we see signs, we need to assume that the uptrends will continue. Right.
Now, analysts are also saying that gold might not necessarily run its course, but there are other commodities that are sort of looking to overtake that, such as silver, aluminium, and copper as well. So, what are the main reasons behind this? What should we expect to see next year, do you think?
Well, let's look at a few of those. Copper hit a new high today, zinc hit a 6-year high, and silver continues to hit new highs not seen since 1980. Now, some will say that low interest rates are part of the main reason that we've seen a surge in commodities recently. Right. A weaker dollar also plays a part as it makes commodities less expensive for non-U.S. buyers. But I think the biggest driver has been demand in China and other emerging markets, especially in Asia. Now, when we look at silver, there's also the component of inflation concerns because it's used as a hedge against inflation along with gold.
Right.
It looks like these metals will continue higher, and as well as many other commodities in the beginning of 2011 at least. But so far these moves have happened, so if somebody's looking to get in at this point, it's not a safe time to enter. It's better to wait for some retracement and a little bit lower prices.
Definitely, we need to look out for those for next year, definitely. Well, we'll see you next year then, Bruce.
Thank you.
And now back to our main stories. Property developer Nikhil will repay its $750 million Islamic bond with funds that are being made available by the Dubai Financial Support Fund, due on January the 16th of next year. Earlier this week, the company revealed that 91% of trade creditors have agreed its $10.9 billion restructuring proposal, and the CEO said today that the payment through the support fund was expected and is a positive development for the company. And Abu Dhabi's GDP has been forecast to rise by nearly 4% next year, expanding to 568 billion dirhams. That's according to the Abu Dhabi Chamber of Commerce. A recent report by the ADCCI expects the non-oil sector to increase by 5.1% to reach 258.5 billion dirhams next year, a sector that accounts for more than 45% of the Emirates economy. The report also forecasts the population to rise over 6% to nearly 3 million, with the number of workers set to increase by over 5%. And the retirement age throughout the UAE has been raised from 60 to 65, enabling expats to increase their work visas by 5 years. This comes as a part of a new introductory law surrounding visa changes for the expat population, where another introductory law stating expats no longer need a no objection letter from former employees for new jobs has also been passed. Earlier this month, the government reduced labour card validity from 3 years to 2. And for all of this week, we'll be showing you interview highlights from 2010. So up next, an interview with Royal Jet CEO Shane O'Hare.